Hello my fellow freedom builders and welcome back to the channel. Many of you have requested of me a video about oil stocks and I will gladly make such one. I have actually had the thought for a while. So today we start diving a bit into this energy sector. Now the question is it now that we should be buying oil stocks? And I'll come up with a way to find out today, and then I will make some videos in the upcoming time where I will try and have a look at some different oil stocks. I will end the video, however, today with a single stock or two that you can have a look at, but I will make more videos in the upcoming time where I look at some stocks. But first, we have to do an overall analysis to see if the oil sector is actually moving in the right direction right now. And as you know, oil is a commodity. And when we're talking about commodity, or pretty much any goods we're buying and selling, we're talking about supply and demand. And what we need to know is if the supply and demand is in the right, you could say the right balance. So for instance, we can see that if the producers of oil all of a sudden starts to put a lot more supply into the market, then that affects the price. Also, if for instance the demand drops or the demand rises, it could be in this whole case with the virus, where all of a sudden people did not drive cars and did not produce anything, so all of a sudden there was a lot less demand. So we need to have a look at that to see how is the supply and demand situation in the oil market. And when we know that, we can get a bit of a better picture as to if we should have a look at some specific oil stocks. So let's have a look. First of all, here we have in TradingView, we have just the CFD on the WTI crude oil. And as you can see, 2020 has been a terrible year for oil, at least in the first half of the year. And that is, of course, with the world being shut completely down due to this virus all over the world. Then we had the turn here in April, May, and it has been gone up and down, a bit choppy, but as I'm going to show you later on, the last part of the year here is actually just the normal pattern of the oil. It was the first part here that was completely abnormal. So when we can see here, when we're talking about some analysts at least say that the pressure on the oil has been only due to the virus, that is simply not true. We have seen an overall pressure on the oil price since back in October 18 here. We saw a big bull market here over a couple of years where it went from 25 to 75. It was tripling in price, and then it was completely cut in half. And you might remember in the spring here, the oil futures actually went negative because no one wanted physical delivery of the oil. That was an insane situation that I'll remember for the rest of my life. So this is pretty much the oil as we see it. We can also have a look at an ETF called XLE. That is the Select Sector SPDR Trust Energy. That is what we normally look at when we look at oil, and it tends to move a bit later than the actual oil price. So as you can see, these are of course the ETF with the energy stocks. And it is only the last 3 or 4 weeks it has actually been moving up. It did as well here after the downturn in the spring, but then it has been going down, down, down. So right now it seems like maybe we are seeing some uptick in the energy sector. And you can also see we could draw some sort of crude trend line here, and seeing that yes, it is as if on a weekly chart the price had broken this trend line. But then again, the problem with trend line is that if you scroll back long enough, you can always find somewhere to draw it and say, yeah, well, it's getting close to a trend line, I don't want to buy right now. When we're looking at a weekly chart, we can't see a bottom here, we can see a higher bottom, and I would be a bit more comfortable if this XLE got up above this top here at around 45, 46, meaning that we were actually starting to see both higher bottoms and higher tops. But that is just a part of it. That is the price. But let's have a look at what is actually going on in the oil sector, because one of the things is, of course, the supply situation, as I mentioned. Because the suppliers of oil is, if you look at the old standard, that is the OPEC. That was the big pack in the old days, and they were the producers of oil, pretty much setting the price on the world scene. And if the price got a bit too low, then they simply lowered their supply into the world market. They were cutting the productions, and that would raise the oil price pretty much every single time. Today there's something called the OPEC Plus, where some more countries have gotten into, some of the often smaller oil producing countries, but we have pretty much all of the countries that produces oil in there, except United States. They're a bit on the sideline. And as I mentioned in my videos in the spring, with the insane situation with the oil going down, we actually saw, or we have been saying for some years, that every time the OPEC Plus tried to lower the supply to press the price up, then we just saw that the United States, they started producing more in their shale oil industry, simply just to make more money on their oil, so that they could be self-supplying with oil. So that has been a bit of a war between United States and OPEC Plus. So it is a complex game. But what we can see right now is that the oil prices, and this is an article from the 2nd of December here from Shaken Alpha, oil prices, energy names climbed as OPEC Plus expected to extend cuts. And that is because that they agreed a while back on some cuts. I think it was 7.7 million barrels, I should say, per day. So that's quite a lot of oil that they have cut the production. So what they are actually negotiating right now, and I should say the OPEC Plus is a strange bunch of oil producing countries, and they pretty much can never agree on anything. And every time they succeed in agreeing on some sort of cut in the production of oil, it doesn't take many days or weeks before some of them are breaking the deal, and then they start all over. The problem is, of course, that many of these oil producing countries are relying on the income. For instance, Saudi Arabia, they have a production price I think that is the lowest in the world. The cost for them to pull the oil up from the sand is, I think it's somewhere around $5 or $6 per barrel. That is insanely cheap. So you can see that when we have an oil price right now at, let's say, $45 or $50 per barrel, they're making a bunch of money. But the problem is that they have a fiscal budget in the country that over time have grown to rely on oil prices. And right now, the latest number I saw was that Saudi Arabia was relying on an oil price somewhere around $80 per barrel, simply to make their fiscal budgets break even. So as soon as the oil price goes below $80 per barrel, then the Saudi Arabia, they are losing money. There are some other countries where it's even worse. I think Iran has something like $200 or $240 per barrel, simply to make their budgets in the country go in break even. So I don't think it is likely we'll see that price soon. But right now they are negotiating in the OPEC Plus, and you can see down here that OPEC Plus likely will agree to extend current production cuts of 7.7 million barrels per day. So that is what they have run with for the last 3 months, and they are renewing these agreements. I think it is a quarter at a time. Yeah, by 3 months starting in January. So that is something that definitely, if they succeed in that, that would put a kind of a lid on the supply on oil, meaning that it could pressure the oil upwards. So of course, as soon as the oil price goes up, just as with gold miners and silver miners and so on, as soon as a commodity price goes up, their margins goes up dramatically. So that is of course a good thing for the oil sector. And you can also see on all the green numbers here, we can see many of the top gainers and some of the very large companies, for instance, ExxonMobil here and Chevron and so on, they're going up with big numbers simply because there is this rumor of the OPEC Plus agreeing. Now, there is another thing, and of course I will link to these articles below. There's an article about a potential energy trade war brewing between China and the United States, and we have an article here, is OPEC finally making progress toward an oil output deal? It seems like they are, but it only time will tell. But the other thing, when we're looking at this supply demand here, is that as soon as, or as long as the economy is growing and everything is going well, then of course the demand will be high. People will be driving, factories will be producing, oil products will be used in plastics and so on and so forth. But of course this year the demand side has been completely demolished. And why is that? Well, I guess you know it. But here we have a little site that is the Worldometer here, where we can see the number of these cases and deaths and so on from the virus. And one of the reasons why the oil price is not going through the roof right now is, here we have the number of new cases in the United States. You can see it actually hit a record, almost a record, 203,000 new cases. It had a bit of a dip here, but that was because of the Thanksgiving. But when we're looking at the daily number of deaths, we can see that yesterday there was above 2,800 deaths in the United States. That is the highest number at all at any time in the United States. My prediction is that right now this is going up with 20% per week. So if nothing happens, and I must say, I'm sorry to say that if you're from the United States, but on this virus issue, United States is pretty much without any leadership right now. I know that there are some vaccines coming out, but on an overall federal effort to stop this, I don't see much. So I predict that this number will easily get to 3,500, 4,000, and I have a fear that within New Year it will reach 5,000 deaths per day. And the reason why I'm saying that, and it's not to be cynical and only talk about economy when we are talking about life and death of people here, but the reason is that the more deaths, the more cases, the more likely it is that the states will shut down their entire state or part of their economy and so on. But as long as it is not controlled on a federal level, then it is hard for each state, because if they're shutting down some industries in one state, then the industry might move to another state where they are allowed to keep open. So it is kind of a very unpleasant competition between the states right now as I see it, and that is one of the reasons why this will simply explode. So on the demand side, we might see, and it's not for certain, but we might see a cut in the demand again, because United States is one of the major users of oil in the world. So if they shut down their entire economy again, then we would definitely see a blow to the demand of oil. So that is a thing you should keep in mind. And if you doubt that this can have an effect, then you only need to have a look at the oil price, of course. Here we see on the XLE, the energy here. You can see that had an okay start of the year, and then it simply fell off a cliff. And this was, of course, due to the virus. We saw 65% drop, more than the overall economy and the overall market. So we are, this is a very, very, it is a very fragile, you could say, industry when it comes to something like a virus that is really hitting the spending and the transportation part. So that is one thing that if the vaccine really gets going, and or maybe just the rumor and the feeling and the positive fuss about a vaccine coming out, then that could actually boost the demand for oil. So we might be moving into an area with a lot more demand for oil. When we're looking at the seasonalities, because that is also important, we can see there are several surveys on the internet here where you can see this, but this is the seasonal chart for, I think it is the last 20 years in the overall energy sector. And here you can see that the overall energy sector has a tendency of going up dramatically from, January tends to be kind of a sideways month, but then the first 4 months of the year tends to be a very good bull run here. And when we look at the overall trend here, from it takes a kind of a rest here until August, and then it tends to go up again. We can look at the same on the crude oil price. We can see here that from January to, well, until the beginning of July, on a historic basis, of course, this does not guarantee us that we will see a big rise in the crude oil prices, but this is over the last 20-30 years. We can see 20 years range here, ending at a 31st of December 2019 here. We can see that over the last 20 years, this is the average movement the crude oil has had in the first half year, and then pretty much have a down bear trend for the rest of the year until at the beginning of December, where it starts to move up again. So this is, I know this has been a very unusual year, so we have not seen the crude oil doing anything like this in the beginning of the year, but maybe we are moving into more normal territory, and if we are, we might actually see a move up. Maybe not as violent as this move, but we might see a very good move up, and that of course would be very good for the oil stocks. We can also see here that we have the oil futures relative to the S&P 500 over the last 20 years. We can see the same pattern here. Bull market in the beginning of the year, bear market in the end of the year, and we can see relative to gold, pretty much the same picture here. All right. I have tried to, I went into Stockopedia and I made a little screener for you here, and this is just a very crude screener here. I just picked the industry groups, oil and gas, and then oil and gas related equipment and services. This, of course, the oil and gas is the first one to react, and then the related equipment is a bit of a laggard towards this oil and gas sector, because when it starts to really move in the oil and gas sector, they might be a bit wary just ordering new equipment, but when they can see it really starts to run, then a bit later, a quarter or two later, they start to order new equipment and they dare to invest in new stuff, and therefore the equipment and services will be needed there. For a start here, just pick United States, but if you are a Stockopedia customer, there's a link to below. I think they still run with a 25% discount or something like that. You can use that link, but I just put United States in here. You can put other countries in as well. And then I just played around a bit with the numbers here to make sure I got some decent results I could investigate a bit further. For instance, the earnings yield, I took that and said I only want companies that have an earnings yield larger than 5%. And I took a dividend yield greater than 3%, just to make sure that we were getting some large companies. Well, this doesn't guarantee large companies, but we have some companies in the right industry group that is actually producing a yield. They are making money, and they are also paying some of it out to us. And then I took down here, you can see here we have I just sorted it from a market cap perspective. So we have the largest of the ones coming through our little screener here, and that is the EPD, the Enterprise Product Partners. And you can see they are in the oil and gas related equipment. So they are down here. If you want to, you can just have a pause your video and have a look at some of the first ones here. I can just scroll down, and you can pause once in a while if you want a list of these stocks that you can investigate for yourself. But what I have done out here to the right is that I have something called the QVGM rank. That is quality, value, growth in numbers, and momentum in price. And that is on a scale from 0 to 100. There's the stock rank, the overall stock rank in Stockopedia, and there's the value rank alone. And actually the EPD, it is the largest of the stocks coming through our screener, but it's actually also one of the best on all of these three ranks here. So I thought that we might have a look a bit into that today. If we click on it here, we'll just save the screener here. And we'll have a bit of a look at the EPD here. As you can see, a stock rank at 83 and a value rank at 84. We can see they have a PEC ratio of 1.7, which is great. We do like that to be below 2, but many of these, if it is very large oil producers, they would be a bit above because they have only very slow future growth. But we can see here that 1.7 is very decent. They have a PE ratio of 8.8 and an earnings per share growth of around 5.5, so that is very nice. Dividend yield at 9.39%. We'll have a look at that just in a second. The valuations here, they are decent. The quality of the return on capital, equity and operating margin is very good. We have a Petruski score at 6. When we're looking at the earnings per share normalized, we can see that it is growing just slightly upwards here, when I say slightly upwards, it's actually some great growth numbers. It's just coming from a high point here. And we can see that we have a free cash flow, which is also, if we could get the graph up there, going up quite nicely. Now, one thing I don't like really is that when we're looking at the dividend yield here, that is of course up around 8-9%. But what we can see is that the dividend cover, meaning how many times can they pay the dividend with their earnings per share, and that is just above 1, and I do like to be just above 2 actually. And when we see at their free cash flow, how much money do they have in their hand just to spend, to pay out as dividend or pay down debt or whatever, invest in new stuff. They have some free cash flow here, but they are actually paying pretty much double the amount out in dividends per share. That is not something I'm completely fond of, but some of the structures in these large companies makes it so. But I have a feeling that at least some of the oil companies have been tempted to lower the dividend, but they just try to see if they could run with their use some of their capital and then just keep paying out the dividends simply to keep the investors happy, and then hope that this crisis would end soon. But we have seen a very large number of these dividend aristocrats and all overall dividend payers that have been cutting their dividends or completely cancelling them this year due to this virus crisis. Where we can see that they have a growing debt. They have had negative working capital, and that of course is partially due to that they are paying out more in dividend than they actually have in free cash flow, and that of course takes its toll on the working capital. When we see they have an interest coverage just below 5, that is decent, and the current and quick ratio is they're not amazing. But overall, it is a decent, very large company. And when we take it into the fast graph here, as you know, I also tend to do here, and look 10 years back and 2 years ahead here, we can see that they were up being very expensive up here, meaning that the price of the stock were running away in 12, 13, 14 here. It was simply running away from their normal PE line and their growth line here. Then they had some years where they followed it quite nicely, and then they took a really deep dive here down into $14 or something like that, and they have begun to slightly move upwards here. This of course was here in 2020 in the spring, but right now we should be at an area where this is actually good value. And when we are trying to, let's just have a quick glance here, if we're taking from this price and just saying if it should move up to its average growth line here, we can actually see an annual return of 28.5%, and that is included the dividends. And that is decent enough. We can go a bit more into details in the forecasting mode here and have a look at how they would fare with different PE ratios. And you can play around with that if you have a subscription for this. I think Fastgraph, I'm not affiliated with them, but I think they have the cheapest subscription is at around $15, and the most expensive one is up around $40. This is the expensive one, but that is because I want to draw on some other numbers in here. I'm pretty sure you can just get around with the cheap version and then just using this. But you can just look at Fastgraph. They're coming up with some new features soon, I know. So this is one of the ways that I would have a look at this, where you have a fundamental picture saying, yes, I think there is a future for a higher oil price. If you think that, I should not be the judge of that. There are something pointing in that direction, but there's also something in the development of this virus worldwide right now that I am a bit worried about, so that might delay the uptick in the oil price. But if you think that we will get over that soon, if you think that if you look at the seasonal charts here, that is promising a very good first half year of 2021. If you think and look at the numbers and saying, yes, China is really moving on, Asia is moving fast right now, and we will get over the virus in Europe and United States pretty quickly with the vaccines coming up. So if your overall fundamental bias is, yes, oil should be moving up, I think that oil will see $10 or $15 upwards move in the nearest future, then I suggest that you go in and find the stocks that you really want. And of course, that could be some really big, solid growers here, but you could also go down into the other end and maybe find something. Well, this is an extreme, of course, with only just around 5. There is some sort of developer, I think, $5 million in market cap. But you could go up somewhere here and find some sort of smaller micro cap and find maybe SGU here, Star LP, with some very good solid numbers on both the growth and the value. You could go up to the Capital here, the Cross America Partners, and then of course do some research into them and see is there a reason why we have the GGP here showing some very good numbers. We have the DKL, and then do a bit of a further dive into these companies to see if they're actually worth looking at. As I said, I will in the upcoming weeks try and find some good oil stocks for you, but this is the overall fundamental picture. I hope it made sense to you, and if you have questions, of course, just ask them right in the comment section below, or on our Facebook sites on Building Freedom. You can also write me in there. Alright, remember to subscribe to the channel, remember to like the video and all that jazz, and I'll talk to you again soon. Take care of yourself and your money out there. Bye for now.